are going to discuss question 2 from your practice kit, yeah. So please refer to page 17, okay. Question 2 of Indah Berhad. Firstly, let us read together this question. So I assume all of you have read the question, okay. Now we are going to prepare the requirement where you need to prepare the journal entries to record the above transaction. So what are the transactions to be recorded? Let us go through the additional information together. So as usual, don't forget. Okay, as you can see this time, under non-current there will be the item for redeemable preference share. Okay, for chapter 4, of course, you will see this again and again. Okay, from number 1 and number 4, let us sort the transaction into its category. Okay, as for number 1, and you can see that the company wants to redeem all the redeemable preference shares. So the keyword here is that redeem all. So number 1 is about the redemption of redeemable preference share capital. And then this redemption will be financed by partly of right issue. Okay, I'm going to highlight with different colors so that you can distinguish it better. Okay, you are going to finance it by issuing right issue of 1 ordinary shares for every ordinary shares held, where the price is at RM1.20, and this share will be full upon payable in full, and it is fully subscribed and paid for. Okay, so the key word here is the hint here given to you is partly, meaning that the company will use a combination of, okay, method 1 where issue shares, and method 2 buy out of profit. So you need to compare later on, okay, whether the amount of shares has been fully what we call replaced or not, and if not, then the balance will be taken out of profit. Okay, so please be very careful here is that because the word here said partly. So partly maksudnya sebahagian sahaja, not fully financed by right issuer. It is partly. So you know the other portion will be, of course, out of profit. Okay, so number 1 is about the transaction number 1. Transaction number 1 is about redemption, okay, of redeemable preference share. Okay, now let's move to number 2. Number 2, the company wants to make a bonus issue, 1 for every 10 ordinary shares held on 31st December 2003 at RM1 each. The retained earning accounts is utilized for this purpose. Okay, number 2 is not and number 2 is actually not the main content of chapter 4. However, it is a continuous from chapter 3. It still can be tested because it is under one roof. It is under company transaction. So it still can be tested in this question. Okay, but this one is about the transaction on bonus issue. So remember, bonus issue, we don't take money from our shareholders. Instead, we are using our retained profit. We are going to use our retained profit for giving the bonus share. Okay, so number 2, okay, transaction number 2 is about bonus share. Okay, we have another transaction that is bonus issue. Okay, continue on the next information. The company to repurchase, the keyword here, to repurchase 100,000 ordinary shares at RM1.80 per share in the open market for immediate cancellation. So, we know the next transaction is a share buyback, and the company will use the cancellation method because it is said that the company will cancel it immediately. So meaning that the company will not we will no longer in the business, it will be cancelled, and the cancellation need replacement. So you are going to replace the shares which has been cancelled. Okay, so we have another transaction here is number 3. Okay, continue. The third transaction will be share buyback. Okay, using the cancellation method. So there will be 3 steps lah. Okay, compared to treasury shares, you only 1 step. Okay, last but not least, at the end of the year, the company also decided to redeem all of the 8% debentures at its current value. Okay, so we have another transaction for chapter 4 where the company wants to redeem all of its debenture at its current value. So altogether we will have 4 transactions where the last one is referring to the redemption of the debentures. Okay, is that clear class so far?
Yes, madam.
Yes,
Okay,
madam.
so we are going to use the information from the previous statement of financial position. So there will be some adjustment on this account. So let us look together on the solution. Okay, we go for number 1. Number 1, there is the redemption of redeemable preference shares. Okay, as usual, you need to know how many amount to be redeemed. So the question said you want to redeem all. Okay, so meaning that this amount, okay, will be no longer in the company. Okay, you are going to settle it. So you are going to debit your redeemable preference shares 400,000 and credit to redemption of preference shares. Again, remember, why do you need to debit? Because there will be a decrease or reduction. Since you redeem the shares is no longer in your company, so you have to debit the account. Next step is to pay for the redemption. So how much to pay? Okay, you are going to pay all 400,000. So you are going to credit the account. Again, the bank account need to be credited because you make the payment. So remember, you have to twist your mind. Chapter 3, you sell the share, you get the money. But in chapter 4, you redeem the share, you make payment. As for redemption of preference shares, remember, at the end, at the end, the account will have 0 balance. Okay, the next step, once you have paid for the shares, what you need to do is that you have to replace the shares which has been reduced. So how much to replace? 400,000. You have to replace by this value. So how to replace? It is said that the company will finance the redemption by partly issuing right issue. The question is how many shares of right issue need to be issued, right? It is said that there will be 1 ordinary shares for every ordinary shares held. So you have to go back to the information of ordinary shares here. It is said that at this current time, the shareholders already have 500,000 units of ordinary shares. So what you need to do is that you need to find the portion of right issue from it. It is said that for every 5 shares that you have, you will get a right issue of 1 share. Okay, right issue of 1 share. So if you have 500,000, what you need to do is that you have to divide by 5, okay, to get the amount of right issue. So the amount will be how much, class? 100,000, is it? Yes, 100,000. There will be 100,000 unit of right issue to be issued to the shareholders. So if you convert this, the answer will be 100,000 units of shares. You times with 1 ringgit and 20 cents. So the amount that you receive from selling the right issue is 120,000. So how to record? Again, recall your memory for knowledge in chapter 3. The right issue should be debit, bank, credit, right issue. And then you close right issue account and transfer to ordinary share capital 100,000. So again, let us recheck whether the shares has been fully replaced or not. RPS redeem was 400,000. So you have replaced by right issue of 120,000. Okay, still insufficient. So you need by how much? You need another 280,000. Okay, to fill up. So where to get this amount? You are going to take it from the retail only, because there is only the way. It's either you sell share or you take from the profit. If it's not sufficient, then you have to combine both methods. So this 280,000 will be taken from the profit. So the transaction will be debit retained earning. Okay, remember when you take from profit, your profit will be reduced and you will ganti it and transfer to ordinary share capital 280,000. That is the procedure by the standards. So you have to follow the step. Debit retained earning and transfer it to the ordinary share capital. So at the end, okay, you have replaced back the 400,000. Okay, if you compare, you have debit the 400,000. Now you have replaced it by mix of right issue and the out of profit. So it's tally back to 400,000. Okay, class. So far, can you understand?
Yes, madam.
Okay, anyone got full marks for this? I mean, got correct for the answer? Class? Based on your try just now, did you get the same as mine?
Yes, madam.
Very good. Okay, very good. So let's proceed to the next transaction. Okay, you will make a bonus issue for every 10 shares held on 31st December 2003 at 1 ringgit each. So this is the transaction happened on 31st December, balance on the 31st December 2003. So again, we are going to refer to the ordinary shares, but this time as for bonus issue, you will only get one for every 10 shares. So as for the bonus issue, for every 10, you will get, okay, on one of bonus share. So what you need to do is that you have to divide by 10 lah. Okay, you have to divide by 10. So you will get how many units, class? 50,000 so kalau you divide ni, you will get 50,000 unit lah. We convert to units, you will get 50,000 unit and you times with 1 ringgit each. Okay, the question said that you will issue at 1 ringgit each and you are going to utilize the retained earnings accounts. So debit retained earning because again you will take the amount of money from this account. Because bonus share, you won't get money from your shareholder. Instead, you are given them for free. So you need to use your own reserve, your own money. So where do you take the money? Retained earning. Debit retained earning, 50,000. Credit bonus issue and then close bonus issue and transfer to ordinary share capital the similar amount. Okay, we're done with bonus issue. I hope at this stage you already know how to record bonus issue because this is from chapter 3. Okay, the next transaction is about the share buyback for cancellation method. It's already stated here clear that the company will immediately cancel the shares once it's purchased from the open market. So the difference between this method and treasury method is that this share is no longer in the business, meaning you cannot resell it in future. Tak boleh jual lagi. Sebab apa? Memang dah tak ada. Once you purchase, you will cancel it immediately. You akan lupuskan dari syarikat. Tetapi according to Companies Act 2016, you have to replace the shares. Okay, you can go back and refer to the notes. As I mentioned here, okay, this is what I meant about. According to the section 127 subsection 13 of Companies Act, the Act requires that when own shares are repurchased and cancelled, the cost of the shares purchased by the public listed company must be made wholly out of company's retained profit. Thus, the cost of share buyback should be backed by an equivalent amount of the retained profit. You kena ganti balik amount yang you dah cancel tersebut. Amount tu berapa? Nilai cost yang asal tu lah. Dengan mengambil amount tersebut daripada retained profit. You kena ganti dengan ambil amount yang sama dari retained profit. So let's go together how it goes. So the first step is cancel the share. How to cancel? Debit the ordinary share capital. Nampak? When you debit, meaning the shares is being reduced. So you debit it. How much? Okay, back to the question, you only repurchase 100,000. So 100,000 unit at 1 ringgit and 80 cent each. So the amount will be 180,000. Then you credit a temporary account called purchase of own shares. And then when you have repurchase, you need to pay. So you debit purchase of own shares and credit bank. So as you can see here is that the purchase of own share will have a zero balance at the end of its period, because this is just a temporary to open before the payment is being made. So once the payment has been made, so the POS account will be closed. Okay, then the next step, okay, don't forget, according to section 127 subsection 13, the company need to back up, okay, the amount of shares cancelled by taking the same amount from the retained profit or the retained earning account. So you will take the same amount, 180,000 is now, which has been cancelled, and you will transfer to the ordinary share capital. So here you have replaced the amount, okay, by taking from the retained profit. Okay, class. So do you clear about this method, class, compared to treasury shares method?
Yes, madam.
Very good. And so please make sure you are able to distinguish between the cancellation method and treasury method. As this cancellation method, you will immediately cancel the shares, meaning the shares is no longer in the company, and at the end it needs to be replaced or need to be backed up by the same amount, but you just take from the retained earning. But as for the treasury shares, okay, you don't have to back up anything because the shares are still there, because you are going to sell it in the near future when the market is improved. That's the difference of between those two. Okay, last transaction for this company is that the company wants to redeem also its debenture. Okay, how much? All. Okay, back to the previous balance. Under the non-current, you also have debenture. Okay, so this debenture is also one of your debt. So you need to redeem, meaning you want to make the settlement and you want to settle all. So how to record? Very easy peasy. Okay, just like how you pay the bank loan, you just have to debit your debenture account and credit your bank with the same value. Okay, bank shows that you make the settlement. The reduction in bank makes that shows that you make the settlement by paying the money. Okay, class. So that's all for question 2 of Indah Berhad. So far, we have discussed 2 different questions, and I think that is enough as for the preparation of this coming quiz. Okay, with that, I stop this recording.